you can make this argument. I don't know if it's true or not. Google Alphabet may be cheaper now with the move higher than it was yesterday. So to Karen's point that she said to me, it actually might make more sense to buy it today up 90 than it did yesterday at the levels it was.
I haven't gone through the math, so I don't know if it's cheaper today with this and how much one would adjust their earnings up. But I think what's happening here is Google was really in the penalty box after that very disappointing quarter that they reported last time, and that they didn't seem to have either a great handle on it or they were not able to convey confidence that, this was a temporary thing and that they would reaccelerate growth. And so I think there's a bit of a re-rating back from out of the penalty box to now you're back in good standing. To me, this $25 billion share repurchase is fantastic. This balance sheet, it's almost like an albatross of cash, one of the biggest cash hoards in the world. So for them to $25 billion, that is a very significant move. Thank you for doing that. As a shareholder, it's been very frustrating that you haven't. I think it's great. It doesn't say how long, it just says from time to time, but still, that's very good. It's very accretive. So there's a lot to love in the numbers. There's also, we don't have clarity on some of the things yet, the calls now. But I really do think there's back out of the penalty box. So that's very good.
I would highlight what you're talking about on the buybacks. I would call this their Apple moment. Remember when Apple really went and made capital markets a lever that they were going to pull in terms of buybacks, debt issuance, bigger divs? We've been waiting for Ruth Porat, who comes from a more traditional CFO environment, has been seen as someone who's brought a lot of transparency to Alphabet, and I think she has. I think, as Karen pointed out, that second, the last quarter where effectively we were hearing about an FX headwind that was the reason for coming in light was complete garbage, because FX is not a structural issue. FX is transitory. And frankly, we haven't had those FX headwinds.
Right.
So I do think this is an important moment for Google also to get the confidence from the capital markets as much as show that the core business is very much alive.
So last quarter on a $30 billion revenue number, they missed by $1 billion. They did say some things like, next quarter, OpEx is going to be less than expected, okay, or growing less than expected. That should be good for what this quarter showed is this EPS, right, kind of beat here. And they also talked about FX headwinds. That's kind of what hit the stock last quarter. So now you have a $1 billion revenue beat. You have a good EPS beat. The stock coming into it was only up 9% on the year versus its MAGA complex. We know Apple and Amazon were each up 32% on the year. We know that Microsoft was up 38% on the year. So this is the one that, like you said, has been in the doghouse. So if you could really look at Q1 and say that was a one-quarter blip, now you're back in business. I mean, it's that simple. So now here we are. We're back to that level. It gapped down to 1,200 back in late April. But don't forget, people, we know the DOJ. We know all this stuff is lurking out there. And so to me, I just think that I'd be very surprised to see this thing back up at those prior highs at 1,300 anytime soon.